To talk about back home, but before we talk about our market action on Friday and over the course of last week, let's welcome on board Mr. Ed Yardeni, the President and Chief Investment Strategist at Yardeni Research. And Ed, hi, morning. Pleasure to be chatting with you Monday morning. Give us your sense of the tariff announcement that we've seen on EU. 30%, is this a number that you were expecting? Because the street was largely penciling in a number around 20%, but 30% has slightly shocked the European markets given the move we've seen Friday. So what's your take on the 30% tariff?
Well, this almost seems like Liberation Day 2, right? Liberation Day 1 was on April 2nd when the president introduced a whole bunch of tariffs on all of our trading partners around the world. And then he postponed it on April 9th and said that he would push the deadline out to July 9th. And then a few days ago, he announced that now the new deadline is August 1st, and then he kind of went back and threw all of these tariffs at various countries. And so we're kind of where we were when we started with the April 2nd Liberation Day tariffs. The market seemed to be much calmer about it because I think the perception is that the president changes his mind, that what the president is doing is negotiating. It isn't a very pretty thing to watch, but hopefully this thing will be resolved by the end of the summer, and I think that's what the markets are anticipating.
Hi, Ed. This is Shrishti also joining in. So, Ed, yes, of course, post that April 2nd announcement, and now no major changes is what we are seeing, barring a few in terms of the percentage of tariff on major geographies. But, Ed, how do you believe that the markets will digest this over the course of period? Because for now, this seems to be a much calmer, but we have all witnessed that what happened back in April and then in May, not just the US markets, but even the emerging markets were definitely reacting to that. So do you believe as and when the markets digest the kind of impact these tariffs going to have on the global economy, the markets can react in a negative way?
Well, sure. I mean, if this continues to be a re-escalation of the trade war, it is a negative for the global economy. It's a negative for the U.S. economy, and it's a negative for global stock markets. But I think the perception is that we're still very much in a negotiation phase. The president is somewhat frustrated that he couldn't get his 90 deals in 90 days. That's what Peter Navarro, his trade advisor, was touting as a possible scenario. But so far, there've only been 2 deals, and there's still plenty being discussed. So it's a very fluid situation. And on top of all that, Trump said that I think on Monday, he's going to be announcing what he's going to do about Russia. He's not happy with Russia's response to his attempts to create a ceasefire with Ukraine. And there's some talk about him imposing some pretty severe tariffs on countries that buy Russian oil. Obviously, that applies to India. It applies to China. So it's all getting quite messy and quite confusing. But the markets have learned to cope with it. And I think the markets are betting, and I agree with the view that this isn't going to last for many more months. Trump really can't afford to have a recession later this year going into next year, when the midterm election next November could very well cost him, the Republicans, very thin majorities in both houses of Congress. So I think the market is right that this issue will pass, and that he'll move on to other things like campaigning for Republican candidates for the midterm congressional elections.
I'd appreciate that view. Before we let you go, just want to get your sense on where do you think this number could stabilize going ahead? Because the April tariff on EU was 25%. Right now it's 30%. This largely seems like a negotiating tactic. Do you believe it could come back to 25 or maybe even go below the 25 levels to, let's say, 20%? Is that a possibility that you're penciling in right now?
It's very hard to make a conclusion based on what Trump says, because he obviously does say a lot of things and they aren't always the same day after day. They can change. And so right now he's actually suggested that even that 10% base tariff that everybody's supposed to pay might be raised to 15 to 20%. He's obviously very happy with the amount of revenues that are coming in as a result of the 10% tariff, the risk is that he becomes a little bit too aggressive in his perception of how much money tariffs can raise without fully appreciating the extent to which this creates lots of trade frictions, lots of trade problems, and exacerbates a trade war, which isn't good for anybody.
Indeed, but Ed, lastly, help us understand that how are you tracking the cues that we are getting from gold as well as dollar index? Because gold is once again seeing a bit of a surge. Do you believe that more is yet to come? And along with that, what's your take on the dollar index?
Well, I've been bullish on gold ever since it rose above 2000. It looked like an important breakout towards new highs. We have been making new highs. We're over $3,300 now per ounce. I've been bullish on gold fundamentally because the foreign central banks of countries that we don't get along with, that don't like us, don't like our way of doing things, they've decided to buy a lot of gold ever since Russia invaded Ukraine and we froze the assets of the Russians. And so there's been a lot of demand from central banks. But then, of course, the geopolitical situation, the trade war, all these things have benefited gold. And the flip side of that is that's been a negative for the dollar. But I'm not that negative from here. The dollar's down basically 10% so far this year. I think that's about it. I think there's still a lot of demand for dollars from foreigners who continue to do a lot of business here, as well as recognize that our capital markets are still the most liquid, probably safest capital markets in the world. Maybe, if you want to be really safe, you go to Switzerland, but that's a fairly limited currency.